This is a week where the stock market was down. So even though the stock market was down, and it wasn't down a lot because of Friday's big rally, but it was still down, you got almost an 8% move up in the GDX. Now, what's even more significant is that we're still below the October high for the GDX and GDXJ right before Trump was elected. That's not too long ago. It's like, what, 4 months ago, 5 months ago? Gold is more than 15% higher than it was in October 2024.
In the latest silver news, unlike in past cycles, when silver has played catch-up to gold during a bull cycle, silver is primed to outperform gold right now. Technical and fundamental analysis hint at strong bullish momentum for silver. According to the global investment firm WisdomTree, silver prices are anticipated to outpace gold prices. Supply deficits and growing industrial demand are expected to act as strong tailwinds for the metal's value. Precious metals dealer Peter Schiff states an unusual divergence between gold and silver, with gold up 50% from its 2020 peak. He attributes this to central banks buying gold but not silver, while retail investors remain on the sidelines. Based on his experience, Schiff believes young crypto investors will eventually recognize the value of precious metals. The negative economic outlook, characterized by rising inflation fears, wildly swinging currencies, and stock market uncertainty, creates a perfect setup for silver to shine. Historically, silver has thrived during periods of inflationary pressure as investors seek hard assets like silver to preserve wealth. While reflecting on the market, Schiff calls central banks the insiders of the fiat system, noting their gold purchases as a loss of confidence in fiat currencies. Concurrently, Schiff notes that central banks are buying gold, not Bitcoin or silver, due to storage limitations. Since 1973, major central banks continued to hold gold in their international reserves, even though it was no longer required to back their currency. And such holdings represented a rising share of the value of their international reserves as the gold price increased over this period. According to the Goldman Sachs researcher, in January, central bank gold purchases were 7 times higher than the pre-2022 average, which he believes meant that governments are walking away from U.S. Treasury holdings because they are not safe. As we move forward, Schiff dismisses concerns over gold failing to hold $3,000, attributing it to normal profit-taking. While remaining bullish on silver, he urges investors to buy before the market corrects its undervaluation. Now, we present the clips of Peter Schiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Gold closed at around 2,985. That was the highest weekly close ever. And as I'm recording this podcast on Friday night, gold is up again, not above 3,000. It's up about $5, $29.90, so about $10 below 5,000. You know, the significant divergence between gold and silver is, even though silver is, doing well year to date, did well on the week, it's still below its high price from 2020, where silver got above $35. So we're getting close to taking out that 2020 high. But what's significant is that gold is 50% higher than it was at its peak in 2020. Now, I think that's unprecedented. I haven't really gone and looked at the history, but I'm pretty sure that there's not another period in time where the price of gold rose by 50% and the price of silver went down. That is a really weird anomaly that you're not going to see, because there is a high correlation even today, between gold and silver, very highly correlated. But to have a time period where gold rises by 50% and silver goes down, that really highlights how abnormal this situation is. And again, I think it's because the main buyers of gold are the central banks. And the retail public that would normally be buying silver, they're not active. They're selling. They're selling gold. They're selling silver. And, some of them are buying crypto. But this really highlights how great the opportunity is in silver. I mean, I think gold's cheap too, but I think silver is a hell of a lot cheaper. And people, I think, should be focusing a lot of their precious metals firepower on silver, because I think it is going to catch up and get to where it needs to be when we start to get retail investors coming in. I mean, they're still missing in action. They still don't get it. And you know what? I hear a lot of people say, "Oh, the young people, they're buying crypto, so you should do what the young people are doing because they represent the future." They don't represent the future in that respect. I mean, yes, the young people are the future, but when they're older, they're going to be smarter, and they're going to be more experienced, and they're going to have more wisdom. The idea that we should follow the investment advice of kids is farcical. A lot of investors, when they look at the market, they look at insider buying and selling. Well, because they generally have better information. I mean, they have a really good feel for the company, a handle on what's going on. So you see the insiders in the fiat system dumping their fiat, dumping their dollars. They're not buying Bitcoin. They are buying gold. Now, they're also not buying silver. That is the opportunity for the retail investor to buy that silver. They're not buying it, not because they're not bullish. They just don't have a place to put it, right? That's not the monetary asset that they want. But the retail investor should be buying it. I mean, people should be calling up Schiff Gold, get on the phone tonight, fill up your shopping cart. I mean, silver is going to explode. I hear people saying, "Oh, gold, it's bearish. Look, it couldn't hold 3,000." I mean, it went above it once. I mean, you would obviously expect in a big week, gold up over 2.5%, that somebody would take profits at 3,000. It doesn't surprise me that there was some profit taking at $3,000 gold. What's a good indicator is that it even traded above 3,000, and the fact that it ended the week as strong as it did, and the fact that silver outperformed. But also, I like the fact that now we're getting the gold and silver mining stocks outperforming. The GDX was up 6% on the week. That's the senior miners.
Regarding the market fundamentals, Schiff predicts that if the Nasdaq enters a true bear market, Bitcoin will fall below $65,000. Conversely, he sees gold thriving from a market downturn or Federal Reserve intervention with rate cuts and QE. The Nasdaq hit correction territory on March 6th, meaning it had fallen more than 10% from its most recent bull market high, and the losses continued to mount in the subsequent days. Most notably, the index tumbled 4% on March 10th, its worst single-day performance since 2022. Gold's role as a safe haven asset is further reinforced by past trends, such as its 22% surge during the early months of the COVID pandemic when economic confidence collapsed. At that time, inflation remained below 1.5%, but there was a major loss of economic confidence and an associated drop in equity prices. Moreover, Schiff believes this shift will expose Bitcoin as a speculative asset rather than a store of value, leading investors back to gold. Let's get back to the interview.
I think that's going to be more obvious, because if this is a bear market in the NASDAQ and not a correction, a bear market is down 20%. And if the NASDAQ goes down 20%, Bitcoin's going way down. Bitcoin's going to go down, double. Bitcoin's going to be, a lot below maybe 65,000 at a minimum, which means it'll be less than Michael Saylor's average cost for all the Bitcoin he's leveraged up to buy. But if the NASDAQ is in a bear market, if you look at the last three NASDAQ bear markets, the big one was in 2001, right? Following the tech, NASDAQ almost dropped 80%. During the bear market in the 2008 global financial crisis, the NASDAQ was down 55%. And in the recent, very abbreviated COVID bear market in 2020, the NASDAQ was down 30%. So the average of those three is actually 55%. So if this is going to be an average bear market and it goes down 55%, where the hell is Bitcoin going to go? I mean, it's going to get decimated. It's going to get obliterated. And not just this price, but the whole narrative, because gold's going to go up. If we're in a bear market in the NASDAQ, gold's going way up in that bear market. If we don't get a bear market, or if the bear market gets cut short by the Fed, right, which I think is the only way that the NASDAQ's not going into a bear market, and the S&P for that matter, the Russell 2000 is almost there. I mean, we've moved down like 17%, 18%. So the Russell 2000 is going to be the first index to tip in a bear market territory. But I think if we don't get the bear market, or we don't get a bear market, where we're down 40, 50%, it's going to be because of the Fed. It's going to be because the Fed comes in and rescues the market with rate cuts and quantitative easing. But if that happens, that's even more bullish for gold than the market's going down. And so even though gold negatively correlated to the NASDAQ when the NASDAQ is falling, it's going to be positively correlated when it's rising. If it's rising because of rate cuts in QE, especially if inflation is still above target, which it will be. That's going to be the game changer. It's going to be that the Fed is going to be easing when inflation is above its target. That's never happened before, ever since they made up this 2% target. All of their easy money, all their rate cuts and all their QE, they've been able to get away with that under the pretense that, well, inflation is below target, and so we could do this. They've never done it when inflation is above targets. Now there's no excuse, no pretense. And I think there you're going to get a big drop in the dollar, which we haven't had yet. Yes, the dollar index has been going down, but you're still looking at 104 on the dollar index. It hasn't really dropped very much. We're at 103.7. So we're back below where we were when Trump was elected. So all of the Trump dollar gains have been eradicated. But we haven't really had a weak dollar. If the Fed starts cutting, or when the Fed starts cutting and going back to QE, the dollar is going to get killed. And that is an environment where gold's going to shine much brighter. See, the gold's been strong even when the dollar has been relatively strong on foreign exchange markets. But when the dollar gets weak, which it is going to do, I'm convinced that we're going to see a much weaker dollar, then that is going to be very bullish for gold. But I also think, in this shakeout, we can see the whole Bitcoin narrative fall apart, in which case there's no reason for a strategic reserve, and people will realize that. And so we're not going to have it. We're not going to have it on the state level. I think you're going to see all the selling from the ETFs. People realize, what the hell do I own it for? If it's just digital risk, I get plenty of risk in the stock market. Why do I need it in crypto? If the whole idea was, well, this is a safe haven store of value. No, that's gold.
The prices of silver in the international markets have witnessed an uptick due to industrial demand and global uncertainties. Until mid-December 2024, silver was on track to outperform gold. However, a sudden contraction in the final 2 weeks of the year allowed gold to overtake silver, closing the year up 27%, while silver finished with a 21% gain. Do you believe silver will finally break from its historical trend and outperform gold in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.